even before the Friday job numbers. So looking forward to jumping in today. And I think there's opportunities aplenty in many different forms. I think I'm looking forward to getting into all of those today.
As always, guys, we'll be covering everything to do with the latest charts. So we'll obviously be covering dollar index, S&P 500, currencies in general, crypto today, and some stocks as well, and the commodities, because, of course, things are heating up in both oil and gold. So a lot of stuff to discuss. We'll also be doing our favorite of the week in terms of our technical picks of each week. And so far, not too bad on those, Ty. And also some great questions coming from the community. So if anybody has a question, ask it in the chat, and we'll answer it throughout or at the end of the session. So there are no dumb questions, Ty. I've always said this. There's always somebody else that has the same question as you, or even thousands of people with the same question as you. So if you want to get some potential answers, just let us know what that is. Quick risk warning before we get started, and then we'll see you in just a few moments. All right, so let's get started, Ty, with the one that everyone's talking about, which is, of course, crypto and Bitcoin and Ethereum in general. Now, these are really popping off at the moment with everything that's been going on. And, of course, there are a few catalysts. We'll just talk about the brief catalysts here in terms of the fundamental side, I guess you would say. First up, there's what we call a seasonality, a halving cycle that's coming up for Bitcoin. And I encourage people, if you're not aware of the Bitcoin halving, it's well worth just understanding it, what it means for Bitcoin moving forward. The other thing is, of course, that we have the exchange-traded funds that are making everybody love life because, of course, we have alternative asset potential placement from some of the largest funds in the world, and that's helping to build liquidity. And then on top of that, we've just got general speculation and FOMO in across the board, Ty. Now, funnily enough, we saw a little top tick yesterday, which was a new all-time high for Bitcoin. And as soon as it ticked above, just went slightly above, it then proceeded to lose about 15% in the next couple of hours. I do expect it to be a very volatile trade around here. Remember, if you see a 15% move, although the bounce is absolutely normal, generally speaking, that usually means someone has come in and they've decided it's time to take a little bit of profit. So I thought from an understanding perspective, when you see these huge candles, especially larger than 5 to 10%, which sometimes does happen in all trading instruments, Ty, it usually means somebody with probably some information better than us has come in and said, you know what, that was a great run. For now, I think it's going to cool off. And that doesn't mean it's ended or the trend's ended or anything like that, but it can often spike into consolidation, can't it, Ty?
Most definitely. Look, it's going to be a very, very interesting party when Bitcoin does eventually break to a new high and actually looks like it's going to continue on, because really it could, I mean, look, people are calling anywhere from 100,000 to 500,000. Like it could go, it could go anywhere. And I think that it's got here at an astronomical rate. Like you've got to look at it to probably appreciate how fast it's actually got to this. Basically what is an all-time high again is astronomical. Like the move has just been, and it's not like Bitcoin, didn't have big moves before, but this move is just extraordinary. The way that it's been able to get up there so quickly. And look, you know what? You would be a very brave person trying to stop it, Tom. Like it could continue on and put another 20,000 on in a heartbeat. So realistically, I think that it's following the trading technical analysis rules now. There's enough volume behind it. I think there's enough trading behind it now where you can actually look at the normal rules that we talk about every day. There's a pullback to the 20 moving average, bang. You've got lightning bolts everywhere you look. It's all technical, and I think it's easy to trade when you start looking at it. Absolutely, the
20 exponential has held a few times. I would just kind of say that we're probably, in terms of some data statistics, we've hit a plus 18% plus over 3 days here. That usually means consolidation is coming. Obviously, a negative 5% at all-time highs. One thing we can go through and look at in the previous history, and this doesn't mean you should be selling it. As Tyrone said, it's a freight train. But if you actually look at when we lose around 5 to 10% in one hit at making previous all-time highs, it can consolidate for a period of time. Some notable ones were here, and then, of course, here when we saw a big drop. These are all at new all-time highs. Then we see a huge sell-off, and that just means a consolidation. And it's probably due, but as Tyrone said, it could go up an extra 20,000 or even more. Another thing I thought that might be just interesting for crypto traders and anyone around the world is to think of market capitalization, because if you can believe it, Ty, Bitcoin overtook silver this week in terms of overall market cap. It went to a $1.35 trillion size, which is very large. A lot of people say gold next. Just remember, gold's about 12 point something
take
trillion.
it easy, everyone. Take it easy.
It's a very large asset class. What I like to think of though is there's no problem with giving a market capitalization size to where you think things are going. Ty mentioned before, people are calling 100 to 1 million. So if you think about it, 1 or 200,000 would basically mean that we are looking at around a $3 trillion to $4 trillion Bitcoin size this cycle. And that is theoretically possible. It's about a third of overall gold size. To get to, gold size, though, it might take a little bit of while. Usually it needs to be a very mature market at that point. I love it, though. I love people's enthusiasm for it. Let's go over to, I guess, the old school now, Ty, and talk about stock markets for a moment, because, of course, we saw the first signs of weakness in a little while from the stock market. Still not good enough, though, is it? This 20 moving average has been too powerful for now. How big is this 50-50 zone that we've got highlighted? A previous low and a 20 moving average, just to say the least. Like, huge zone, yeah?
It's probably the most important zone in the last probably 2 years for this one. And the reason I say that is because it's actually, yes, you're going to go back on the S&P 500 and say, Ty, what are you talking about? There's been plenty of places where it's found consolidation and support and resistance, but it hasn't actually done it at an all-time high or after hitting an all-time high. And I think that's the key. The fact that it's actually gone up here, the 20 moving average, if that breaks down and can't sustain its levels above that moving average, which is, it's actually done basically, I mean, if you go all the way back, since October 23, ever since it's got above the moving average, it has not actually come down. It has not actually even, it's barely closed below it. I mean, there was one there, in January, early on in January.
Was it?
Negligible at best. Barely. It was like barely. Like you wouldn't be there if that's what you're looking for. You're clutching at straws. So you've got to really be very, very mindful that this has been a juggernaut. That the 20 moving average has been the mainstay, holding it up all the way. Trading bonanza is the best way you can describe it. Now, the fact that it's done everything that it's done, and it's at an all-time high, and we've seen that little bit of weakness, it needs to hold here. Look, it can't go up forever. We know that. If it breaks the 20 moving average, doesn't mean it's going back to 3,500. Well, no, of course not. Well, that doesn't mean it can't, but no, it more than likely, we're going to see a pullback, and probably one that the market really needs, Tom, to be truthful. Markets that are out of control and don't pull back properly are markets that are hard to trade, markets that will cause you all sorts of pain when it does eventually reverse. Markets will eventually reverse, like, make no mistake. And when the longer it goes without a healthy pullback, the more violent the return's going to be. And that is a precarious situation for people who are entering it late, right? So really, it doesn't make us bears because we want the market to pull back. What it makes us want is actually a healthy market that we can actually get involved in. And albeit, power to it. If it wants to go to 5,500, that's great. But come back to 4,800 first. Give us a chance to have a breather, jump on in, Tom, and then we can say, you know what, we've seen a bit of a reflex action at that point. Now we can look to the highs again. But the way it's going at the moment, it kind of needs this pullback for a healthy market.
Yeah. So I agree. It would be nice to see a pullback here just because it is March as well, which is seasonally weak for election years, which of course we're in the US. So it would be nice to see it. However, that doesn't mean it's going to happen. So let's talk 50-50 for a moment, because of course at the moment what we have is a high, we have a low, we have a higher high, and we have a support. So this is where the bulls are. And you can see that the reaction has already been relatively bullish in terms of the initial reaction in the previous session. And if you were a patient person and you already had this level, and I'm sure a few people did already have this that were in the room right now watching this live stream, then you would maybe have liked that from a buy the dip perspective. Now, you'd be pretty happy here this morning because, of course, it's rallying up. So levels to watch. The reason I've got here just this overall volume profile is just to show you that around the zone it's trading right now has been a fairly large and fairly heavy trade zone. We don't have much above it. 51.20 is going to be an interesting zone. Now, what I like to do, and I thought we'd bring this in, is, of course, we're using the Pepperstone platform here. But, of course, in TradingView, you do have access to looking at a couple of pairs. It is worthwhile also loading up your SPX. Now, what SPX is of course, it's the real market in terms of it doesn't trade all the time. It trades only during market hours. So you will notice that we have a gap. And what a gap is where it closes and it opens the next session somewhere else from where it was. Now, again, is the 5150 level, or is this level very important? Absolutely. You'll notice it's slightly different on the SPX just because the prices will be slightly different. So 50-50 is the zone. And you can see here 51.26 is the key. So that's going to be a zone where if it does rally out, there could still be a bear around this level to get a gap fill. What we're looking for, though, if you're a bear, is you're looking for a new low here. And I think a new low tie exposes this zone as well, which was a heavy buyout that we saw the other day. So why we do this is because these two levels, 59.82 and 51, let's say 29, should be on our US 500 code. So we should go back over to our US 500 code and it'd be worthwhile marking those in. And you should mark them as like, let's say gap zones so that you know that if the market, I can't remember what this was, 49.80, I think. Lose my memory there. But these are both fills. So what I would tend to do was I would actually go in here and I would label them. And I would label them, let's say, gap fill. And I would label the top one as well with gap fill, just so I know what they are and that they are still important levels. Now, that's just a little bit of homework that I would do every single day when it comes to analysis of the S&P 500. And I think that if you're not including that in your analysis, maybe you should consider doing so. There are some indicators as well within the TradingView platform that you can get that I believe read the SPX and put them on your charts automatically. Though I can't tell you which one it is because I don't personally use it. I go old school still. So Ty, breaks under 50-50. What do you think about the chances of it getting to 49.80?
I think a break under 50-50 would give us an extraordinary chance to get down there. It's all about momentum, of course. And look, the market comes down quicker than it goes up as a rule. Mm-hmm. So if we do get a break below that 50-50, I'd be looking at the smaller time frames, very, very standard trading. Go to the 1 hour time frame, look for pullbacks to a 20 moving average, get involved. Like I look at that. Look, there are key levels everywhere. The 5,000, is a level as well. Like, make no mistake, there will be potential bulls at the 5,000, but I think that zone, I think we probably really want to call it a zone anywhere between that 49.80 to 5,000 marker is a level that you're going to pay a lot of attention to if you are shorting. Well, let's just assume that it does break the 50-50 and we get a daily close below there. You want to be aiming for that from a scalping standpoint. Okay, so if it enters that zone, the first time you see weakness inside that zone, so when I say weakness, I mean the first time on a really small time frame you see a tick up on a higher high, higher low sort of sequence on a really small time frame, I'd be getting the hell out of that one because that's basically a 49.80. That's a different story altogether because then it really exposes the 4,800 and the 4,600 levels. And although they sound a long, long way away from here, believe me, you can get there very, very quickly. If we break that 49.80 level on a daily, you might be surprised at how fast you can get down to 4,800.
Yeah, I think a big move's happening at that point. We're talking about mean reversion to the 20 weekly, which we'll talk in is another one I would have on my charts. But I just want to show you here again, volume profile. There's basically no trades that went through here as it went up. Now I've only taken it from the low to the current price, and that's because you can see over on this left-hand side, there's just no trade there. So that basically means that if the market comes through, there's very little holding previous price action. So it most likely will go to discover the lower level. At least that's from a technical perspective. So as Tyron said, if you're getting, whatever your system might be, if you're starting to see that could be interesting. For now, though, as it remains above 50-50, theoretically the bulls are still in control. So it's very important that you always put your opinion at the door because we might have an opinion it's overpriced or it's going too high or it's away from the standard deviation. If Bitcoin can prove anything to you recently, you probably wouldn't have guessed it's going to an all-time high before the halving cycle. You might have said by November, but you probably wouldn't have said by now. So, expect the unexpected in markets. And 4,800 was the level Tyrone was mentioning before, which is, of course, our weekly mean reversion. And we haven't had one weekly MA from the perspective of this entire rally from October. And that's quite rare. Like you look over, there's a touch, okay? Rallies, touches, rallies. Over here, one of the most extreme runs we've ever seen in life. Rally, touch, 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 touch. You can see the 20 min reversion was an exceptionally good one. Even in the dumps of 22, touches, 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 goes a bit higher here. and then eventually reverses through and goes. So it's rare not to see the 20. We are fairly extended away. Generally speaking, if you take the high to the low, you can get an idea of whether we're exceptionally away. And I've done some studies on this, Ty, and I found that that's actually not that much. We've easily been upwards of about 12 to even 18% before away from mean reversion. But that being said, it's been a long time. So S&P 500, very interesting week. What is going to be the catalyst for this, Ty? It's going to be Jerome Powell, most likely, or non-farm payrolls. We have 2 Jerome Powell testifications. I'm not sure if that's a word. But anyway, he's testifying twice. And that's once today, so the Wednesday, and once on Thursday. And then we have non-farm payrolls on Friday. So I expect catalysts to either push and squeeze higher, or we're actually going to get this maybe well-earned sell, which will be coming through. I would say the catalyst has to be this week. You just think it would be.
Yeah.
You just think it would be.
Very good chance.
All right. So let's move over to dollar. So dollar's foreshadowing basically maybe yields coming down. So US 2 and 10-year yields. We're seeing a drop here in the US dollar through the 20 moving average. It's still holding kind of within the zone. But as we mentioned last week, the euro has remained that kind of nice bullish place. I will go into my pick of this week, Ty, which is already on the move. But we spoke about last week, and that's the euro for me. So I just want to kind of talk this through again. So obviously we had the series of trend line down. We had the rally through, which gave us a confirmation. Much better confirmation, of course, than the dollar index itself in terms of breaking through the 20. And then we pulled back last week, and I saw it hold the zone of 108. And I really liked that. And this could be a huge, well, it already seems like it's a swing change. But have a look at this action here. We hold, and wicks. I love wicks. And when we see these wicks here on this 2-hour chart, what a great day that would have been to be a scalper. As it rallies through that higher high, exceptionally good. And of course, at the moment, it's looking at putting a big daily close in if Powell does the right thing for it and the Federal Reserve effectively bring the cheese, then there could be a chance here that the euro has actually made its short-term bottom, and it could be in for maybe even a month of movement, Ty. What are your thoughts on the dollar and euro combo?
Yeah, I'll take you back to the dollar index for a second, Tom. And it's still within my tolerance level of not just yet. It is trying really, really hard. But if you look to the left of the screen a little bit, you've got basically, nearly 3 weeks of wick action that is supporting the 103 and a half. So basically, it's still got a handful of, in my mind, it's still got about 20 more points before it's really, really at very heavy support. If it breaks down past there, I think it's in awful trouble. That's a very, very different scenario. But I'm not panicked yet on the dollar index long. If they it's still got a little bit of work to do, no question about that. But it's still got a little bit more tolerance in my book, just a little bit more.
Yeah. So I think the euro is an aggressive trade in many ways, but
and the breakout could be significant. You're right. I mean, look, if the dollar index breaks to 103.50 on the way down and breaks through all that support, like look out, because the next support's 102.50, which probably equals a 109.50 euro, maybe even 110. So
even 102.20. I'm thinking like this to here is quite likely if we do breach below, and I think it's going to be fierce. And at the same time, the euro. Oops, I don't know where my euro trade is now. But if we go to the euro, let's just see if that combos with what you're talking about. So obviously the euro would then be moving to about a 109.44-ish zone, that doji over here on the left. Yeah. So there's some significant movements here on the euro and on the dollar. I really am enjoying the dollar moves at this stage. Yeah. All right, let's go through the next one, which was I think it was my pick of the week. I think you had odd last week, if I remember rightly, which was oil. So obviously here we were, and we moved on the higher end. So I think where were we, around this area here? So we moved on the higher end. We moved up to about an 80. We came back down, and then we're still holding this zone. So that's that 78 level. Now, the US oil is an interesting one because it's actually shown signs of it has to kind of hold here. And you'll notice I have some alerts here today just in case it does start to bounce back up. That was actually from the previous session, but it's still sitting there for whatever reason. So basically what we're looking for is a new renewed daily close. And I'll show you the daily here, Ty, because we have to look at both Brent and US oil, so US oil and UK oil. because 20 moving average still intact, which I know you're going to like, and US UK oil, which we'll bring up here, which is Brent, and sometimes Brent goes faster than US oil, continues to hold the 20 and continues to consolidate. Imagine a Brent through 84. It's going to be, I think, quite ballistic and a lot of momentum coming through here.
Yeah, I don't like that for the Bowser prices if that happens, Tom. I don't like that at all. But look, the crude price, right on the 20 moving average, like you say, look at all those touches on the UK oil. Like you've got basically, nearly 5 or 6 touches there just in the last week and a half. Like it's a very, very important zone for it. No question. Really, really important.
Yep. Huge coil. We know that whatever comes out of a coil like this, a range-bound market's usually explosive. Just remember, if you do end up getting a breach, let's say the breach is boom, and then it instantly starts going back up. Although you might have accidentally shorted it, you're probably going to lose on that trade straight away. You'd be surprised how often the reversal of that trade, and it may seem like, but that's revenge trading.
No,
not really. If you know what you're talking about. So you got trapped, and you've got to put yourself in the mindset of if you got trapped, how many countless thousands of people got trapped in that particular trade? And I think the answer is going to be a lot. So you'll find that these types of moves, whether it's an up and then an instant reversal as well, are often even better, especially even if you went bad first. You'll find that the ratios do pay out quite well.
Especially if you get a big wick reversal too. Like if you get a massive hammer candle there or something like that. And don't forget, even a couple of daily candles below the 20 moving average that end up above it, is going to be a wick candle on a weekly. So just be mindful of that. The bigger time frame, generally lends the way. So look, I like the oil, I like the crude trade mainly because it's broken that level of resistance that we know. It's come back down. Definitely found support there at that sort of 78-ish area, 20 moving average touch. It kind of needs to go here though, right? Like I wouldn't want to be hovering around. I wouldn't want it to go any lower. It needs to go here. If it doesn't go, if we don't get a daily close above 80, I'd be starting to get a little bit concerned about this one. I wouldn't be that excited.
I'd be very concerned.
Yeah, if we get a daily close above 80, I think 82, 50 to 84 is a highly likely level for oil. But if we break down and all of a sudden we're closing below, say 76, which is below all the key moving averages on the daily, we're probably heading back to the low 70s again, and it can happen very, very quickly because that's in the middle of that trading channel again. So it kind of needs to look. I reckon. Look, Tom, what happens in non-farm payrolls all the time is that the markets, many of the different trading instruments gravitate to extraordinarily key levels prior to the news. We see it all the time. And realistically, a lot of this is what is actually happening. You can see that the indices are at a crucial point, the oil's at a crucial point. Even some of the currencies that are at a crucial point, they're waiting, right? They're waiting, they're consolidating, they're buying time, I like to call it, in a week where, time is relatively cheap. Because we're just counting down the hours to some very, very important news, obviously, the most important news of the month most of the time. So it's not really surprising that oil is here, but I wouldn't want it to be back. I wouldn't want to see it at 76 for the long opportunity, that's for sure.
Yeah, 76 would be a huge close down. So just a quick reminder as well, if you enjoy this type of content, make sure to give it a thumbs up and let Pepperstone know that you enjoy it and that you like us using the TradingView platform and obviously going through all these pairs each and every week for you. Remember, we do it every single Wednesday. So subscribe down below with the link so that you can basically follow along with all the stuff we do. Now, Ty, and also ask questions in the room, guys. We'll answer them through. So gold, Ty, this is a huge one because, of course, everyone's been talking about Bitcoin. But are we about to see gold make a new all-time high? I've been rabbiting on about it a little bit in the last couple of days. That weekly close was massive, all-time high weekly close. And then, of course, now we're at 21.26, which is a big level for gold. So I think that gold is actually going for it. It's going to need yields to come down. So in general, the best synergy is yields down, gold can go up. I don't have time to explain that full synergy right now, but that is part of what tends to happen here. Remember, gold is the oldest currency, and things are starting to heat up for this one. So we've got some strength here in the gold charts. And if we go down to the daily at the moment, it's just daily highs. And as long as I think basically the previous lows are holding, the trend could continue up in weakness, and maybe it needs to consolidate for a little bit. But I think this is going to come back to the Fed and the non-farm payrolls this week. And if it does blow out, could we be looking at a $2,300 an ounce fairly quickly for gold? What are your thoughts?
Yeah, now that gold's been replaced by Bitcoin as the safe hedging instrument, we can probably start looking at gold a little bit differently. Yeah, the new safe haven is Bitcoin, apparently. So, hey, and you know what? Yeah, kudos to Bitcoin. I mean, like I said, to replace silver is an extraordinary. That's amazing, really, when you think about it.
Yeah. No, look, I'm a bit of a nasty Bitcoin maximalist. I got to say, my knowledge really stops at probably Ethereum. That being said, I do believe that it has a place because let's be real, anyone sub probably 35 at the moment really tends to have a bit of it and tends to love it a lot. Although I wouldn't be buying a coffee with Bitcoin. Let's just say that once you look at the transfer prices.
No.
Then again, I wouldn't buy coffee with gold either.
But Tom, would you have bought a pizza? Now,
the poor pizza guy. No, the $1 billion pizza or whatever. $1 billion pizza.
It'd be billions. It'd be billions by now.
It'd be up.
Yeah. Look, gold. I like that it's done what it's done, but I found I've covered it every day in every stream. This week actually, it was an extraordinarily difficult one to get into if you weren't in it from the start. It was very difficult to catch hold of any because it didn't really return. Once it got moving and it cracked through, it never gave you an opportunity to get in. Look, sometimes that happens, but now that it's actually reached the new all-time high again, you can look at it with a different lens, I believe. I think that if we see a new high now and then it comes back and tests that high from above, which is going to give us the role reversal that we need, I think that you're right. Yeah, maybe 2,300 could happen very quickly.
Yeah,
it moves in a big hurry.
Look, and it's got some massive catalysts. It's been a long time coming. I mean, I was just putting this out here. Look at 2020 all the way to now. Basically, it's done nothing.
Yep. No, it's very, very active at the moment. That's for sure.
A lot of people have this as the cup and handle tie, and they're loving it to high prices. I'm going to go out on a limb and say, for my own personal opinion, don't do anything with it, is that I actually am feeling pretty good on the gold concept in terms of it actually doing okay if we do start to see rate cuts, because I do feel like it's been a long time coming for gold and silver, and they've been so suppressed for so long. So if you think about it, if you look at silver here on the charts, it's actually super far behind gold as well. I'm not as big a fan of silver, but look how suppressed it's been, 29.50. And if you go out to 3 months and you look at really old history, there was that one time it got through in 11 where it went ballistic. But it seems like silver just not really coming along with the gold party at the moment. And I'm not sure what to do with silver. It's not really my kind of wheelhouse. But in general, I would say that that's a decent accumulation base. What are your thoughts? Do you like silver at all?
I think it should have gone by now. If it was going to go, it should have gone. I think it's kind of missed the boat. I think it's not the favorite. It's not the favorite. It's the poor cousin. It's the poor freckly-eyed, red-headed cousin that kind of sleeps under the stairs again. For a while there, it was really good. Like it was actually basically moving in sync, and the correlation was actually really, really easy to trade. But that has broken away now. There's no question about that. I find it very hard to trade, to be honest. I think it's very difficult at the moment. Gold is the one. If you're going to trade, gold is the one you want to be in, because you're getting the volatility, right? You're getting the movement, which is what you need. It's playing the technical game, albeit it was very difficult to get into that last move. But a break to the new highs, I think, would be exciting.
Yeah, I think it will be exciting times for it. Let's talk about the sour apple tie. Phone sales are down in China, and the market hates it. And the market already was preempting this. A series of lower highs and lower lows coming into the base. A fairly easy trade if you wish to take the risk. Now, shorting the market recently has been very difficult, so most people wouldn't be doing it. But I just thought I'd kind of reiterate that there are, even the best stocks in the world sometimes show weakness. You can see here it weakening, and then it just couldn't hold up, broke down, and now we're sitting at 170. So the reason why I want to bring 170 up is because of the overall pattern. Now, a lot of people are pointing this out and saying, take a look at this mass double top. Is this the beginning of something big? Here's the high, here's the high, here's the middling kind of like, let's call it the intervening trough. Ty, do you really think this is a double top? Would you actually trade this type of pattern, or do you think it'll even hold 168?
I think that if the 170 breaks, I think this is going to be a big short. I think that I don't believe 160 will even hold after this. I think that it's a double top. If you look at it on a monthly chart, there's no question it's a double top. It is. Yeah, you can see it's a little bit clearer on a monthly, and it is there, and you'd be right in saying that, you know what, if you look at it from that standpoint, and if you look at it on a monthly chart, I mean, you look at that last candle before the last three red ones, and it was a very, it was basically almost a shooting star at the top of the peak on a monthly candle, right? So it's a big drop. I mean, like, really, it's not that unbelievable that it might actually reach that 140, 130 area, because that would be what the pattern would demand. And it's fallen against the grain, let's not forget. Like, you still got the NASDAQ, trying to reach a new high, albeit it was a bit weak over the last day or so. Like, this is the stock that's responsible, or one of the evil stocks that was responsible for getting it up there in the first place. And now it can't. Now it's not holding its own. So you would have to say that, if we're seeing the stock that actually got it there, or one of the key stocks that actually got it there in the first place, showing so many signs of weakness, if the NASDAQ, pulls back to a reasonable level, you could see this capitulate. And if it does do that, that pattern may well play out, and 140 would not be out of the question. In fact, I think it's highly likely.
And the 130 is even low. So the Mag 7 has become the Mag 4 overnight. So we've got a mixture of Google, Apple, and Tesla all in. Now, I'm just going to throw down a stat that we posted today. Tesla is technically in a bear market. Now, what a bear market is negative 20% from the peak, Apple is down negative 15%. Google is down negative 15%. So in essence, they are 5% away from turning bear market on some of the biggest stocks in the world. So it's amazing how much NVIDIA and Microsoft and obviously Meta and Amazon are holding this thing up. Now, this is a big, important day for it. We know that if we look at the NASDAQ here, which is obviously bouncing, and don't get me wrong, we don't have any signs of, other than some individual stocks finding weakness, you can again see the low here, similar to the 50-50, finding bull pressure, daily 20 moving average, finding bull pressure. There's no turn just yet. The bulls are in control, okay? But what we're trying to point out here is that something where, if Jerome Powell says something, or the non-farm payrolls decide, oh, this isn't very good for the economy or whatever, it can be like a flick of a switch, and all of a sudden we're through this 20 moving average on both the S&P, and we're making lower lows after switching over here on the NASDAQ. That's going to be, I think, pretty significant for all these trades. And it's not just Apple. I mean, again, let's just have a look here at Google for a second so you guys can see it. Here's Google. Again, it's bouncing. It's at a level of demand. For some bulls players, 168, 170 is going to be a big one for Apple, and Google around 132, 134 is going to be, I'm getting a negative 15% discount. I think it's pretty strong. And I've seen a lot of charts out there today, Ty. People are drawing trend lines through the bottoms here. Not my kind of trend line, but anyway, they're drawing that type of thing. And I've seen all.
They're hanging on for dear life, I think, Tom.
You think that trend line's no good?
No, they're hanging on for dear life. And look, you've got to. We must emphasize that market pullbacks are good for longer term bull markets. We do need markets to pull back in order to move forward with more confidence, right? So it doesn't mean market Armageddon. It doesn't mean in any way, shape, or form that this is the end of the great era of trading. But a pullback is healthy, and then what it does is it gives you opportunities to actually get back in at a very, very good level. But just as importantly, especially on a lot of these stocks that have hit all-time highs, it gives you a previous high to aim for, and that's really important, because it actually makes trading so much easier when you've got something to aim for. Look at gold. Gold is it's problematic because it's never been here before, and every move that it does moving forward is going to be fraught with danger, because people are going to say, well, it has to return now, or it's at all-time highs. Yeah, can it keep going? Probably not, is what the general consensus will be. So there's always going to be those bears trying to short it because it shouldn't be there, they'll say. But when you have stocks that have already, like, let's say when gold actually got that big move in the first place, everyone was like, oh my God, what happened? Yeah, is it an anomaly? Is the chart broken? But now that it was already there, look how easily it got there, with ease. And it's the same for a lot of these stocks. So really, yeah, a pullback is healthy, because then when it does eventually turn around and you start to see momentum shift to the upside again, you've got very good levels to aim for. And those levels often, the market gravitates those levels like a magnet.
Yep, that's right. So, Ty, we're going to jump on over to one of your picks of the week in terms of your favorite technical analysis. I just want to remind everybody, if you have a question, please feel free to put it in the chat. Also, give it a thumbs up if you enjoy this type of content. And we also want to give a big shout out to Michelle, Motivation to Wealth, Matthew White, thank you very much, and Arfie Boy, with some emojis going on there. Thank you very much for watching. So, Ty, you've got USD CAD as your pick. I had Euro USD a little bit earlier. What are your thoughts here on USD CAD? Which walk us through it.
I do like the Cookie Monster, Afri Boy. I like that little emoji. It's kind of cool. I like the Cookie Monster. I like the US dollar CAD, Tom, for a couple of reasons. It's been building up to a really nice level. As you know, the 135 sort of 80 level has proven to be a bit of a stumbling block for it to move forward. But this isn't weakening in the way that, obviously it's a dollar-based pair. So, generally speaking, we would because the dollar index has been a little bit weak, I would have expected probably the CAD to be a little bit weaker. But to me, it looks like it's gravitating towards a break of this 136 level. And if it does break this 136 level, I think it bodes very, very well for a move up to around that probably the 138 to 138.50 relatively smoothly. Like, you can see it's building up. We're getting a series of higher highs and higher lows. The only things that have worried me about the CAD in recent weeks is, although it is making higher highs and higher lows, the highs aren't that much higher than the previous high. So it's kind of grinding its way to new levels, rather than actually, it's pressurizing this level at 136 really, really heavily. Like these last 5 days, you can see a lot of wicks there. The moving averages have well and truly crossed. They're separating. The 12 and the 26 are definitely separating. The 20 and the 50 are separating. So the MACD is getting higher. The main key moving averages that we look at are getting higher, and it's peppering this very heavy resistance. Now, look, it hasn't done it yet, but I would like to see a break above that 136. And I think if we get that break above 136, even if you don't get the first impulse move out of it, if it does come back and test it from above, I think it can produce a very, very good role reversal area. And really, like I say, I think 138.50 is the ultimate target here. I don't think it'll take very long to get there if we do eventually break through there. It looks to me like it's trying to get through. A little bit more work to do, but this was entitled to be down today. I mean, if you look at the dollar index, it looks weak and it looks like it's about to break a support level. Although it's not as correlated as the euro is to the dollar index, it is still a dollar-based pair. We must remember that, right? So to me, it's similar to oil, Tom, where it's peppering a break out of a zone. And if that zone does eventually break, and there are obviously close ties with the CAD and oil anyway, they both seem to be doing the same thing for mine. And if, God forbid, the dollar index does turn up and absolutely smacks the euro down again, the US dollar CAD, I think, is going to be probably the one you want to be playing the game with, because it's the one that's about to break a very, very heavy level of resistance with pretty good upside.
We've got 1, 2, 3, 4, and 5 wicks here as well, Ty. So I think a closure above will be so big.
It's a big deal
on the left-hand side.
It will
obviously,
be a big deal.
you're talking. I kind of just drew out a range that I thought the targets could be at if for a swing trader. I do think there's a little issue here at 137, which I think you'd probably agree with, 136.90. Yeah. But in general, this is a very big vicinity. What you could also do is, if you haven't been using fixed range volume profile inside of the TradingView platform, that's something you could also look at. You can see here that big trade around that 137, and then an interesting zone, probably around 138 would be the stop. So it seems to be every cent after that. But I agree with you. Wicks hold the key. A closure above wicks probably means that the dollar has also reversed. That's obviously going to bode bad for my euro. But there's a trade on both ends.
Sorry about that.
No, that's this hasn't happened yet. Wait a second. This could be a real wicks. what if it takes the new low? So we basically, what I guess this really is coming into is a great learning concept for today. And yes, Bank of Canada interest rate today. So that's why it's hovering. But basically, if we think about it, this is a classic case of patience, react, don't predict. So in this case, we might be saying the euro has already broken up, so therefore you can be reacting to it. That's before news, before anything. So you're just basically trading it. This one here, we don't know the story yet. But once we find the story, then we could potentially react to that. You might say, well, that's too late, but it'll save you from having a false kind of thing. If you just guess it's going up and then all of a sudden it gets crushed, the problem with guessing, Ty, is when you start scaling out your trades, that's not going to work out for you long term, especially when you start building
we don't want
your
any
money.
part of guessing. And like I said, this has still got a bit of work to do because, quite frankly, we still haven't seen a daily close above 136 yet. And until it does, it's still a no-go. But it's a very important area, and I think that despite what the interesting that the rate cut may well do the job, it may well get it up there.
Rate cut or rate hike? What are they going to do?
No, they're going to hike it for sure.
I want to see rate hikes. Come on now.
Seriously,
that's something that's there. Look, Ty, we've had plenty of chat interaction, but I thought I'd just leave it with a few things that I guess people don't know too much about in terms of just yields. Just remember to get your yields for your currency, generally speaking, let's say it's a AU01Y or something. If you're interested in knowing, let's say, an Australian bond yield in the future, you can type this in, and what this is actually going to do is it's going to show you what the market believes yields are going to be at the future. Now, you see all this stuff in newspaper articles. If you want to know where the US is theoretically going to be or the AU is going to be, and you don't have to read articles, you can come up with it yourself. This is what the market's saying. So at the moment, you can see here that it looks like the Australian economy is obviously weakening. Why? Because there's a couple of rate cuts on the horizon over the 1 year period. So that's what the market's telling us. Just remember, that's really what you're doing as well when you've got your US 01Ys in there as well. So if you look at the US 01Y, which a lot of people don't have their chart, we've got a 4.98, which is again showing about 2 rate cuts over the next year. Now, at one point, that was a lot more rate cuts. So you can see that I just think that a lot of people don't use some of these codes. These are some that are very helpful. All right. Well, we just want to say a big thank you to everybody out there that's been enjoying today's show. Obviously, every week on Wednesday, we cover everything to do with crypto, commodities, and stocks. And we're always covering the major pairs than anything we see. We've always got like kind of our favorite of the week that we go through. And I tell you what, there's a lot of momentum on the charts moving forward. From all of us here at Pepperstone, we want to say a big thank you. Subscribe down below to our weekly mail out list so you guys can see when we're doing this. Give it a thumbs up if you enjoyed it. And from Tyrone and myself, we want to say a big thank you as well for attending live, from your comments, your very kind comments in the chat. And we hope that these have been valuable to you. I can tell you what, a few weeks ago, Ty, someone brought up copper, and I've got to say thank you to them because I liked that trade. Let's just say that was pretty sweet. So thank you very much to the random person in the chat, because there's opportunity. So there's always something else we're learning, Ty. And I think, that's one of the big things about trading. You're always improving, aren't you?
Absolutely. And I think bringing these streams to you weekly, look, Tom and I are no strangers to streams. We do 2 a day on the daily. So in our Market Masters Club community. So we love streams, but for us to be able to get together every Wednesday and share what we're seeing, with the team that I can see is joining us every week, which is fantastic. We do really appreciate your time, and we hope that you can get something from it. And look, if you have any suggestions of what we can do better or what we can bring you that actually can make your trading better, please let your Pepperstone representative know, because they pass on all the feedback to us, of course, and we try to bring you the most appropriate information that we possibly can, because ideally this is actually for you guys to benefit from. So thank you so much for joining us tonight, though, and we look forward to seeing you all next Wednesday.
Thank you so much, everybody. We'll see you next Wednesday. Bye for now.